If you own a home and you're over 60, I want you to picture the moment that envelope arrives or the email notification pops up and your stomach does that little drop before you even open it. The property tax bill, the one bill that feels like it never gets smaller, even when you've done everything right. You worked for decades, you paid what you owed, you took care of your family, you finally reached the years when life is supposed to get a little lighter, and yet the tax bill shows up again, higher than last year, like it has its own heartbeat. And here's what's quietly happening across America. Millions of older homeowners are paying property taxes they may not legally have to pay at the full amount year after year because there are senior exemptions, freezes, credits, and deferrals that exist on the books. But they are not automatic. They are not advertised in a way that reaches real people, and the county is not going to call you to say, "Congratulations, you now qualify." Most seniors only find out after a neighbor casually mentions it, or after a crisis, after a spouse passes away, after a health bill hits, after the escrow payment jumps, and suddenly the mortgage feels like it came back from the dead. By the end of this video, you're going to understand what these programs actually are, how they work in plain English, what documents you need, what deadlines matter, why people miss them, and how to find out this week whether you qualify for savings that could last for the rest of the time you live in your home. Before we go further, comment your age and your biggest struggle right now. Is it medical bills, prescriptions, rent, groceries, retirement timing, caregiving, or scams and financial stress? Just write something like 67 prescriptions, or 72 property taxes, or 74 caregiving. You are not the only one feeling the squeeze, and your comments help me tailor these guides to what you're actually living through. And one quick but important disclaimer, I'm a senior benefits educator, not your tax professional. This is general education, not tax or legal advice for your specific situation. Property tax rules are set by states and administered locally, and details vary by county and city. Always verify directly with your county assessor or property appraiser, your state revenue department, or a qualified tax professional. Now let's talk about the part nobody says out loud. Property taxes can become a health issue, not just a money issue. I've watched seniors skip dental work, ration medications, delay doctor visits, and stop driving to see friends because they're trying to stay ahead of a tax bill that keeps rising. Chronic financial stress doesn't just feel bad, it can disrupt sleep, increase anxiety, and make it harder to manage chronic conditions. That's why this matters. When we reduce an avoidable monthly or annual burden, we're not just saving money, we're protecting your energy, your choices, and your independence. Here's the central truth that explains everything else. In some form, in most states, there are property tax relief programs designed specifically for older homeowners. The names change depending on where you live, and that's part of the trap. In one county, it's called a senior homestead exemption. In another, it's a senior assessment freeze. In another, it's a circuit breaker credit. In another, it's a deferral program. Some are statewide, some are county-based, some are city or school district specific. But the principle is nearly universal. Lawmakers recognize that retirees, especially those on fixed incomes, are uniquely vulnerable to rising property taxes, and they created legal ways to reduce the burden. The problem is not that help doesn't exist. The problem is that the system is fragmented and quiet, and you can live your entire retirement never realizing you were eligible. So let's make this clear and powerful by breaking down the mechanisms, because once you understand the mechanism, you can recognize what you're looking at when you call your county. Most senior property tax relief falls into four main categories. The first category is the exemption that reduces taxable value. This is the most common. Your county assigns an assessed value to your home, and your taxes are calculated by applying local tax rates to that value. A senior exemption reduces the taxable portion of the assessed value. So if your home is assessed at an amount and the exemption reduces the taxable value by a set dollar amount or percentage, you pay tax on the lower number. This can lower your bill every year as long as you remain eligible. In many places, it's tied to age and primary residence, and sometimes it's also tied to income limits. The second category is the freeze or assessment cap. This doesn't just reduce value today, it can lock in your assessed value at the level it was when you qualified, so future increases don't hit you the same way. For seniors who bought decades ago in areas where home values exploded, this can be life-changing. The third category is the circuit breaker credit or refund. This is designed for people whose property taxes have become too large compared to income, and in some states it's delivered as a credit on a state tax return or even a refund. And the fourth category is deferral. Deferral doesn't erase the tax, but it can delay payment until later, often until the home is sold or transferred. So you can stay in your home when you're house rich but cash poor. Now I want you to hear something that may surprise you. The difference between a senior who saves $1,000 to $3,000 a year and a senior who pays full price is often not income, not intelligence, not luck, and not even the state they live in. The difference is almost always awareness and action. And because you're here right now listening, you already have the rare part, awareness. We're going to turn that awareness into action you can complete this week. Let me tell you about Elaine, 66, because her story is the kind that makes you realize how quiet this problem is. Elaine lives in a modest home she bought 25 years ago. Her neighborhood changed, values rose, and her property taxes climbed steadily. She kept paying because she assumed there was nothing to do. Property tax is property tax, right? Then one day, after she retired, she realized her escrow payment was creeping up faster than her Social Security cost of living adjustment. That's a terrifying moment for a lot of people. You start feeling like retirement is shrinking around you. Elaine called her county assessor's office and asked one question. Do you have any senior exemptions or freezes? She discovered her county offered a senior program with eligibility based on age and income. Elaine assumed she wouldn't qualify because she had a small pension. She did qualify. After she applied and was approved, her taxable value dropped, her annual bill decreased, and the savings were enough that she stopped postponing her dental work. She told me, "It wasn't just the money, it was the feeling that I could breathe again." That emotional relief matters. It's dignity. Now, you might be thinking, okay, but I'm not low income. Listen carefully. Do not self-disqualify. Some programs have income limits, some don't. Some have limits higher than people expect. Some count household income in specific ways. Some exclude certain items or treat them differently. The only safe approach is to ask your county for the exact rules in writing and then evaluate your own situation. Let's go deeper into how these programs trigger, because this is where seniors get blindsided. The trigger is almost never automatic. In most counties, you must apply, and there is usually a deadline. The deadline may be tied to a tax year, an assessment date, or a filing window. Miss the deadline, and in many places, you miss the savings for that year. That's not to scare you, it's to motivate you, because deadlines are the difference between saving starting this year and saving starting next year. Also, many programs require that the home is your primary residence. That means where you actually live most of the time. If you own a second home, you usually don't get the senior homestead benefit on that second home. If the home is in a trust, you may still qualify in many states, but you must confirm how your county treats trust ownership. If the home is owned by an LLC or a more complex structure, eligibility can be affected. Now let's talk about the real reason nobody tells you, because once you understand this, you stop waiting for a letter that will never come. The U.S. property tax system is local. There are thousands of counties. Each county has its own office, forms, procedures, and communication style. There is no single national database where you type in your age and get a complete list of your local programs. And even when counties do publish information, it might be buried on a website that feels like it was designed in 2003 or written in legal language that doesn't sound like it applies to you. So the system, by design, rewards the people who ask. It's frustrating, but it's real. And once you accept that reality, you stop feeling helpless and start feeling strategic. If you're still with me, I want you to tap like and subscribe, because this channel is dedicated to making government systems plain, humane, and usable for seniors. And stay with me, because the #1 hidden secret that most seniors don't know about property tax relief is coming in a few minutes. And it can put money back in your pocket even if you think you don't file taxes or you think you missed your chance. Before we get to that, I want to talk about synergy, because you are not living in one program. You're living in a web of expenses and benefits. Property tax relief is not just a local tax issue. It can be the difference between affording Medicare costs or not. Many seniors are paying Medicare Part B premiums and prescription costs and thinking that's just life. But some people may qualify for programs that reduce those costs, like Medicare savings programs through your state Medicaid agency or extra help for Part D prescription coverage. If property taxes are crushing you, that's a sign your budget is under stress, and it's exactly the kind of moment to do a full benefits checkup. Sometimes seniors save $100 a month on Medicare premiums through an assistance program and $1,500 a year on property taxes through a local exemption, and the combined effect is not small. It's transformational. It can mean you stop using credit cards for groceries. It can mean you stop skipping follow-up appointments. It can mean you sleep. Now let's return to the 4 types and make them feel real, because I want you to be able to recognize them quickly when you talk to your county. The senior homestead exemption is the reduce the taxable value type. You apply, you prove age and residency, sometimes income, and the county applies an exemption that reduces the taxable value used to calculate the bill. Some jurisdictions have multiple layers, a general homestead plus a senior add-on. Some have school tax exemptions, county tax exemptions, or city tax exemptions. That's why the same person can see different savings depending on where the taxes are coming from. The senior freeze is the stop the climbing type. It's designed to protect seniors from being taxed out of neighborhoods that appreciated. The circuit breaker is the my taxes are too high compared to my income type. This is often aimed at fixed income seniors who don't necessarily have a low home value but have limited income. The deferral is the let me stay in my home type, where taxes may become a lien to be paid later, often under specific rules. And here's a critical point about deferrals, because people misunderstand them. Deferral is not free money. It's a tool to prevent displacement. It can be the difference between being forced to sell and being able to remain in place. For some families, that stability is priceless, but you must understand the interest, the lien rules, and the impact on heirs, which is why it's a conversation to have with the assessor and, if needed, a professional. Now I want to share Harold's story, 73, because it shows a synergy that too many people miss. Veterans benefits plus senior property tax relief. Harold is a veteran and a homeowner. He had been paying full property taxes for years because he assumed his veteran status was already in the system. It wasn't applied. In many places, veteran-related property tax relief, especially disability-related exemptions, requires an application and documentation. Harold went to his county and asked about both senior and veteran exemptions. He discovered there were benefits he could apply for based on his status and situation. After approval, his property tax burden dropped substantially. The result for Harold wasn't just extra money, it was reduced fear. He told me, "I'm not lying awake in November thinking about the next bill." If you are a veteran or the spouse of a veteran, this is one of the most important calls you can make, because some jurisdictions have significant relief for disabled veterans, and sometimes surviving spouses can qualify under certain conditions. Always ask. Now let's address the most common reasons seniors don't apply, because if you recognize yourself in these, you can forgive yourself and move forward. Number 1 is simple. Nobody told you. Number 2 is you assumed you make too much. Number 3 is you assumed it would be automatic at 65. In most places, it is not automatic. Number 4 is you rent and think nothing applies to you. While direct property exemptions are for homeowners, some states offer renter credits or circuit breaker style help that can benefit renters too. And number 5 is the feeling of overwhelm. Forms, deadlines, websites, income calculations, proof of residency. That overwhelm is real, especially if you're managing health issues or caregiving. So I'm going to make the starting point so simple that you can do it even if you're tired. Here is the simplest, most powerful starting point. Call your county assessor or property appraiser's office and ask what senior programs exist for property tax relief on a primary residence and what the deadlines are. That single call often reveals everything. Ask them to mail you the form if you don't want to do it online. Ask what proof they need, age, residency, income documentation, and ask whether the program renews automatically or requires annual renewal. Put the deadline in your calendar. If you don't feel confident making the call, ask a trusted family member or call your local area agency on aging or senior center and ask if they have someone who can help you navigate local benefits. Many communities have free or low-cost senior assistance resources, and this is exactly the kind of practical help they exist to provide. Now let's talk about state-specific examples, not to overwhelm you, but to show you how different the landscape can be. Florida is well known for homestead-related protections, and some counties offer additional senior exemptions if income limits are met, on top of general homestead benefits. Texas has homestead exemptions for older homeowners and also allows certain tax deferral options for qualifying seniors, which can be a stabilizing tool. California has rules around property tax base, and under Proposition 19, certain homeowners over 55 may be able to transfer a tax base to a replacement home under specific conditions. New York has the Senior Citizens Homeowners Exemption in many areas, which can reduce assessed value for eligible seniors with income limits, and in high-tax regions, the impact can be huge. Illinois has a senior assessment freeze, in addition to other senior homestead benefits for eligible homeowners. The point is not to memorize each state. The point is to realize your state likely has something, and your county has the details. Now here comes the number one hidden secret, and I want you to listen closely because this is where seniors lose thousands without realizing it. The number one secret is that in many states, the biggest property tax relief program for seniors is claimed through the state tax system as a credit or refund, often called a circuit breaker, and many seniors miss it because they think, I don't owe income tax, so I don't file, or I'm retired, so taxes don't apply. But some credits and refunds require filing to claim them, even when you owe zero. That means a senior can be eligible for real money back related to property taxes paid and never receive it simply because they didn't file the form that unlocks it. This feels hidden because nobody sends a postcard that says, please file to claim your refund. The system assumes you know, and if you didn't know, you silently miss out. So when you call your county, don't just ask about exemptions and freezes. Ask whether your state has a circuit breaker program where it's claimed and whether you must file anything each year to receive it. If you have a tax preparer, ask them directly. If you use free tax assistance programs in your area, bring your property tax bill and ask about senior credits. Let me tell you about Gloria, 70, because her story is exactly this. Gloria is a widow. She owns a small home and lives mostly on Social Security. She assumed she was done with taxes. A friend at her church told her to ask about a property tax credit. Gloria learned her state had a program tied to income and property taxes, and she could claim relief even though she owed little or no income tax. She filed, and she received meaningful relief that helped her cover heating costs without panic. Gloria told me, I thought it was too late for me to learn any of this. It wasn't, and it's not too late for you. Now, what if you apply for a local exemption and you're denied? This is where I want you to remember something important about benefit systems. Denial is not always the end. Sometimes it's the beginning of clarification. Ask for the reason in writing. Was it an income calculation issue, proof of residency, a missing document, a misunderstanding about ownership? Many offices have an appeal or review process. Sometimes it's informal, sometimes it's a formal local board. The mechanism is different in each place, but the principle is the same. You have a right to understand why and to correct what's correctable. Don't let embarrassment or frustration steal money from you year after year. And now I want to bring this home emotionally because numbers alone won't move you to action. Your life will. Property tax relief is not about getting away with something. It's not a loophole for the rich. It's a policy choice communities made to protect older residents from being priced out of the homes they built their lives in. When you claim it, you're not taking someone else's share. You're using the system as it was designed. And what you gain isn't just savings, it's stability. It's the ability to say yes to prescriptions without hesitation, yes to a safer car repair, yes to a grandchild's birthday gift, yes to a life that feels less like constant defense. So here's what I want you to do next, while the motivation is still warm. Call your county assessor or property appraiser's office and ask in plain language what senior property tax relief programs exist for your primary residence, what the eligibility rules are, and what the deadlines are. Ask specifically about exemptions, freezes, deferrals, and anything income-based. If you are a veteran or a surviving spouse, ask about veteran-related property tax relief too. Then ask a second question that most people never ask. Is there a state-level circuit breaker credit or refund tied to property taxes, and how do you claim it each year? Write down what they tell you. If you need help, reach out to your local area agency on aging, a senior center, or a trusted tax professional. If this video helped you, share it with one person you care about who is over 60 and owns a home, because the odds are high that someone you love is paying more than they have to simply because they never knew what to ask. And I want you to remember this as we close. Aging doesn't mean shrinking. It doesn't mean living in fear of bills. It doesn't mean being punished by systems that assume you'll stay silent. You are allowed to ask. You are allowed to apply. You are allowed to reduce the burden legally and live with more ease. Comment your age and your biggest struggle. And if you want, come back after you make the call and comment "called" so other seniors see it's possible. You're not behind, you're not alone, and there is still room in your retirement for dignity, confidence, and real hope, starting with one phone call that could change your next 20 years.